All right. Hello, everyone. Good evening. All right. If you can hear me loud and clear, drop a note, say hi. All right. And once again, welcome to the session. And for those of you who are joining us for the first time, okay, first time. Okay, I hope I said it loud and clear. And you need to go to streamyard.com/Facebook. You'll see a blue button after you go to the link. All right. And then after that, just click to approve it. All right. Now, because when you don't do that, this is how you look like. All right. I would love to say hello back to you, but I don't know who you are and I cannot address you by person. Okay. Now, so if you can click on the link or just type it out. Okay. You can also type it out. All right. And it'll bring you to a website and you'll see a blue button for Facebook. Right. Just click on it to approve for the use and we'll be able to see you on the back end. Okay. All right. Now, thank you very much. And let's get our session started. Okay. Now, so all of you can see our model portfolio on my screen right now, okay? And we are probably gonna take some positions off today, all right? But we'll have a look, yeah? All right, now, so let me officially welcome everyone. Hi, Jason, hi, Jeffrey. All right, if I miss you all, I apologize in advance. All right, hi, Shui. All right, great to have you joining us on Facebook rather than on YouTube. All right, hi, Brad. Okay, all right, hi, Monica. Okay, now, so hi, Jennifer, and hi, Nate. Let's get started, okay? Now, so before I get the session officially going, let me hide this, all right? And yes, please, all right, watch the disclaimer at the bottom of the screen. Throughout this session, I will be discussing my thoughts and what I look at in the markets and how do I feel about the markets. But please be aware that trading, investing always bears a risk of loss. Right, so do your own due diligence. Right, seek your own advice if you need to. Right, before performing any of the trades in your own personal accounts. Yeah, all right. Please know the risk in advance. Now, so once again, as a reminder for those of you who are joining me for the very first time, okay, this is a public session which I run as much as I can every single Friday. Right, it is meant to educate the public, not just my community, about option selling. Right now, so everybody wants to build an investment portfolio. All right, so we're going to focus in the stock market, but my approach is slightly different. So instead of buying stocks, okay, what I do is I look for stocks that are worth investing in, right, selling at undervalued prices, but instead of buying them cheap, all right, what I'm doing instead is I'm making a choice to sell a portfolio put option instead. Now, so the difference is this: when I buy a stock, I need the stock to go up in order for me to make any profits. Now, this may happen immediately because the stock is undervalued, but it may not as well. So I don't like the idea of sitting and waiting, right, for profits to turn up. So I like to take things into control. So what I do is I sell a portfolio put. Now, what a portfolio put simply means is I'm a put option seller. But when I add in the portfolio word, it simply means that when I sell this put option, right, I'm fully prepared to own the stock. All right, because as a seller of put option, your obligation is you may have to end up buying the stock. Yeah, okay, if the prices fall below. Now, so I would allocate the capital required to actually buy the stock, all right, in the event that it actually happens. Yeah, okay, in the event that actually happens. Yeah, okay. Now, so before I get there, okay, and get the session started, okay, can you let me know how many of you have seen the hot and fresh poster, all right, that my team has put up in the Facebook over here? All right, how many of you have seen it? If you have, all right, say yes in the chat, say yes in the comments. Yeah, all right, leave a comment, say yes. Right, awesome. So the comments are coming in over here. All right, now, so how many of you are here because of that? All right, now I'm just kidding. Don't worry. Okay, now it's just something that we want to do, right, as a form of reward. Okay, for those of you who are joining us live. Okay, and also helping us share these sessions over the last couple of months. Yeah, we hope you enjoy it. We hope you found it educational as well. Okay, but this month, what we want to do is we want to really reach out, right, through to more people, right, who are looking for great investments and great strategies that can help them grow their portfolio. Right, so let me briefly mention how this hot and fresh giveaway is going to work. All right, now, so from today, all right, from this session itself, okay, all you need to do, right, is to click on the like. Okay, let me put it up. All right, all you need to do is to click on the like button, all right, on this Facebook live session. All right, if you don't know where to find it, I cannot help you. Okay, all right, so go over to our public group page. All right, look at the post which is live right now. Okay, all you need to do is to click on the like button, and then after that, click on the share button. All right, but please know this. All right, you need to share it, and there's a public bracket beside it. All right, that's the one that you need to share. All right, now, so only when you do that, okay, my team will come back and check the session later. All right, and they will start taking notes, all right, of the people who have actually done this. All right, and it simply means this. All right, this is gonna happen, all right, and last all the way until the 16th of September. All right, so the qualifying period is from today until the 16th of September. So every Friday, okay, if you do the same thing, all right, you will get a second entry, you will get a third entry. All right, see how it works, everyone? All right, so turn up, all right, and do it, okay? All right, now, so if you've done this today, all right, you will automatically be assigned a number, okay, okay, on our list. Okay, but when you do it again next week, you will be assigned a second number. Yeah, okay, so my team will take note of the people who shares, okay, and then after that, they will just collate the numbers. Okay, so at the end of the 16th of September or that Friday session, okay, whichever date it falls on, right, we're going to do the draw. Okay, we're going to do a random number draw, all right? So I'll put up the Excel sheet, I'll put out the names, okay, and when we draw the number, all right, we will be giving 3 prizes away. All right, how many of you want to know what the prizes are? All right, if you're excited to know what the prizes are, yeah, all right. Type 1, 2, 3. 1, 2, 3. All right, so remember, to qualify for today, yeah, all right, to have your name on the list, okay, you need to do 2 things, okay? You need to click the like button for this Facebook live feed, all right, and then also click on the share, okay, but it must be a public share, okay? All right, if it's shared only to your personal feed, all right, it doesn't qualify, so it must be a public share over here, yeah? Okay, all right, now, so if you have done that, my team will come back and have a look, have a check after that, okay, and they will start noting down, all right, and jotting down your numbers, okay? Now, so many of you want to know what the prices are. Now, so here's what we're going to do. There is going to be one last quarter, all right, and one last qualifying period, okay, for the 24-hour earning season, okay? We are offering 3 slots, okay, entirely free. Yeah, all right. How many of you like this? Okay, if you like one of the slots, all right, type like in the chat, type like in the comments. Okay, let me know, all right, that you really love a slot over here. All right, now we're giving away 3 slots absolutely free. Okay, during the final draw. Okay, final draw. We're giving it 3 slots entirely free for the Q4 earnings season. All right, together with me. Yeah. Okay, so each of them is valued at $397. Okay, so we're giving away 3 slots just for you to click the like and the share to public button. Yeah, okay, how good is that? Okay, and you can come back next week, all right? You get a better chance. Okay, so do it for us, okay, while your friends, Daniel, all right, thank you very much. Okay, now, so it's just a small initiative that we want to do, all right, and also, to reach out with your help, okay, to more people to know about option selling, all right, and what we do over here, okay, and how they can improve their portfolios. Okay, that's it. All right, it's over. I'm not going to talk about it again. I'm just going to briefly mention before the end. Okay, if you have done so, let's get this session started, shall we? All right, now. So once again, thank you very much for joining me on Friday. This is Terence, the Impossible Investor. Let's get my session started. Now, so for those of you who are new with us, this is a public portfolio that I've been building for over a year now. All right, we've crossed the 1-year mark. I started this in July 2020. All right, July 2020. Okay, and this portfolio started off with $100,000. Okay, and with all the trades that we did, okay, it's literally only like 1 or 2 stocks every single week. All right, now throughout the last 1 year, all right, we raked in $17,000 in cash flow. All right, so this portfolio made about 17%, right, in our first year. All right, about 17% in our first year. So that ain't too bad over here. Now, so we are moving on to our second year right now, okay, with our session last week. All right, and today will be the second period of the second year. All right, so let's see how we do this year. All right, now, so remember, this is a full cash portfolio, which means every single trade that I take, I allocate a full cash position. So it is no different from actually buying a stock. Yeah, okay, so a 17% return is actually stellar because there's no leverage in this public session. If you want to find out how you can generate even bigger returns, all right, we do this on a week-to-week basis. We trade live with our members every single week. In fact, we do it twice. Yeah, okay, so if you want to learn how to generate better returns as an option seller, there is something you can consider. Okay, you can message my team to find out more information if you're ready to get started. All right, now, so let's get to our portfolio right now. And as always, I will start the session by doing a market update and a market outlook. Okay, now, so this is how the market looks like today. Let me widen the screen first. Okay, so I have SPX on the screen right now. Okay, and what you're seeing is that we continue to have this burst up right now. But the problem is this: while we continue to have this burst up, right, you will notice, right, something that is not exactly telling. Now, what do I mean when I say something that's not exactly telling? Now, so what I'm going to do right now is I'm going to go to my platform, right? I'm just going to insert the volume graph. Right now, you can see what I mean over here. Now, while this continues to edge up, right? Now, can you see what's happening to the volume over here? All right, we have, there is absolutely no participation in this market, right? And that's the thing that you need to be concerned about. Now, why? Because right now, okay, there is no catalyst. There is no reason for the market to sell off, right? And because there's no reason, right, and nobody wants to trade because of how expensive valuations are, right? The only ones that are trading are the algorithms and the computer systems, right? And how are these computer systems built, right? They're built, right, to the path of least resistance, right? That means they will always push to generate activity, all right, to scalp profits on their system through the path of least resistance. And of course, we can clearly see the path right now belongs to the upside, all right? It is much easier for them to push it up, right, bit by bit by bit, all right, because there's no one selling, all right? There's no one selling. All right, and all right, it's very easy to catch the people who are trying to enter the market early. Yeah, okay, so that's what the algorithms are doing. Right, you don't see any funds, you don't see any big players participating because the volume is just not there. Now, if you are an option trader, you would see that very obviously in the daily volume of the options traded as well. So this is concern because you don't want to be, too bullish in a current market like that. Yeah, yes, I understand that there's a breakout, all right, because we can clearly see that. All right, we can clearly see that in the index itself. All right, we broke this, we held the support, and then we bounced off from it. Okay, but the issue is this. The issue is, right, that there is no participation. Right, so which means any one trigger can turn this market around very, very, very quickly. Yeah, now, but we don't see that happening as well. Okay, because if I were to add just a very, very simple indicator, I didn't know why that didn't turn out. Oh man, it's lagging. There we go. All right, yes, we do have it now. All right, now, so can all of you see we do have that divergence happening as well? Yeah, okay, because let me bring out the drawing tools. There we go. Right now, so we have the index over here, right, moving on the upscale, right? Right now, so we have the index moving up, right? But we clearly have the RSI, right, threatening on the downside, right? So we do have that divergence over here, right? So that's causing another concern. Okay, so if this reverses and the divergence exists, right, the market can quickly get a sell-off over here. Yeah, all right, the market can quickly get a sell-off. Yeah, all right, now, so I do have a Facebook user that says, count me in for 24R. Okay, I apologize, okay, but because you didn't click on the StreamYard link, I cannot see who you are. All right, okay, now, if you can, please approve StreamYard for Facebook use, yeah? All right, I would really love to know who's leaving this comment. Now, so we're done with the market update. So there are risks, there are concerns that you should be aware about. All right, be protective, all right, but don't get too bullish. Yeah, okay, don't get too bullish. Now, by having said that, it is okay to take on some bullish positions on defensive stocks because that's what I've been doing, all right, on my portfolio. All right, so many participants continue to stay amazed that, Terence, hey, markets are so expensive, but yet you're like, almost 90%, right, invested in this market. And I always say, yes, why not? Because when your money is in, your money is working. And this is where there's a difference when you build a portfolio from an investment perspective versus a trading perspective. Now, when you're trading, all right, now entering at the wrong time, okay, and the wrong side at the wrong time can be causing you problems. But when you have an investment perspective, look at this a very simple way, right? Number one, is the company a great fundamental company? If the answer is yes, that means it's worth investing in, correct? Now, number two, when you're looking at it, when you're deciding to get in on it, all right, is it already undervalued? If the answer is yes, doesn't it present an opportunity? All right, and then number three, all right, if it is a defensive stock, yeah, okay, defensive meaning the staple stocks, right? The companies that run business where economy is good, economy is bad, all right, they will continue to sell their products, necessities. Right now, these stocks are not popular when the market is red and hot. Understand? So money flows out of these stocks into the riskier stocks like your technology and your high-flying ones. Right? That's where they channel the money. But whenever there is risk in the market, right, money flows out of these high-risk sectors. Right? And where do they go? They cannot stay in cash. Right? So they reverse and start parking money into these stocks. Can you see how it works now? Yeah, okay, so that's why I'm actually comfortable, right, being exposed to these kind of counters over here, right? So, we have positions on Verizon Wireless, right? We have positions on Walgreens Boots Alliance, right, on Tyson Foods and on General Mills. Okay, we even took a position on Cardinal Health last week. Yeah, okay, all these are either, pharmacy outlets or they are food related or telecommunications. So can you see they're all necessities? Yeah, all right, now. So let's go. All right, Lily. Yeah, all right, now I can see you. Thank you very much, Lily. All right, for leaving the comments. You're already in with us right now. Yeah, all right, count you in for the next one too. All right, now, so let's go to our portfolio, all right, and let's see what we have, yeah? All right, now, thank you for the compliments, yeah? All right, now, so let's go through our positions one by one. We have VZ over here, and it's a 17 September 57.50 put option. Right, so let's load it up and let's see if we're going to do anything to it today. Oh, man. I don't like these sessions on when I have all the windows open because it causes problems to my platform. All right, give me a minute, everyone. My platform is hanging on me. All right, I've got it back. Give me a minute. Okay, 17 September 57.50 puts. Now we collected $2.43, right, when we sold this put option, right, on the 2nd of July. Now, so let's look at the stock. All right, the stock is still in. Oh man, see what I mean, everyone? Right now, the stock is still underwater, which means, all right, the stock price is below our strike. But can you see, all right, that we're still actually having a profit? Now, this is one thing that I like as an option seller. I collected $2.40 when I sold this put option, right? And look, the stock didn't move, right? We entered somewhere in July, right? Now, let's look at what the stock did since July. So I entered somewhere here. Yeah, all right, I entered somewhere here, and the stock actually dipped, right? It started going down, it bounced up, it went back down, 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 right? But look, right, despite this down little edge over here, I'm still profitable, right? Hence, that's why I like myself as an option seller because I sell time, all right? And time is worth money, right? The longer the stock does nothing, all right, I actually end up profitable on time. Can you imagine if you bought Verizon Wireless as a stock? You obviously wouldn't have profits, but on top of that, you actually suffer losses, correct? Yeah, okay, so this is the difference over here. Now, so I'm not going to close this position because there's still a lot of premiums left on this option itself, right? So it's still very rich, and I have no concerns with a defensive stock, all right, like Verizon, so I'm hanging on to the position, yeah? All right, now, next up, let's go to WBA, all right? So WBA, we have a 17 September 45 puts, all right? Let's see what it's worth today. Oh, it's gone up. up and nice, everyone. All right, so we're probably going to close this position. We collected 152 when we sold this put option. All right, let's see what it's worth today. All right, $45. All right, obviously we're going to close this. Why? Because this option has 35 days left. All right, now with 35 days left, I'm only leaving about 30 cents of premium. So what does this mean? Even if I wait this out for another 1 month, all right, I stand to make only an additional 30 cents profit as compared to closing this trade today. Can you see how, my thought process works over here? All right, so obviously, all right, the per week gain is not working out for me anymore. Yeah, okay, now let me show you very quickly the calculations that we have done before. Now, we entered this trade on the 16th of July, right? 16th of July. Now, so this means when we entered this trade, right, it had about let me bring up my calendar and let's count it, okay? 16th of July, okay, 1, 2, 3, 4, 5, 6, 7, 8, 9. It has 9 weeks when we started. All right. Oh, it's this exact trade that I have on the calculation. All right, there we go. All right, now I was looking to collect about 17 cents per week. All right, that was my per week gain, all right, with the premiums that I collected. But can you see today, if I close it for, if I don't close it, there's only 30 cents left, right? Yeah, okay, there's only 30 cents left. And right, this trade has how long? It has another 7 weeks to go. Correct? All right, 17 September, right? It's all the way, it's about 35 days left. Right? Is that 7 weeks? 35 divided by 7, 5 weeks. All right, now, so let's divide it out by 5 weeks. And there you go, right? It has dropped to only 6 cents a week, right? It doesn't make sense for me to keep this position anymore, right? So hence, I'm going to pay 30 cents today, right? And let's close it. Now, so all of you can see, right? I'm going to buy this option back and 30 cents is on the ask, right? So this is a definite close over here. So I'm going to pay 30 cents, all right? We're going to close this position, all right? All right, now, so let's record it down, 30 cents. That will make us a final cash flow of $366. Right, so we close this. Right, and today it's the 13th of August. So that's going to release the margins or investment requirement. Right, and we made $366 in cash flow on this WBA put option. All right, and yet another winning trade. Nice. All right. Yep, there we go. Next one, TSN. Let's see what TSN brings us. Whoa, this is another good trade. Look at what I mean when I say defensive sectors, yeah? Now, we sold a 17 September 67.50 put on the same day as WBA. We collected 130. Oh, my goodness. Look, everyone. All right, look at what it's worth today, 67.50 puts. All right, it's worth like almost nothing today. All right, the last done was 15 cents, but I believe if I try this for 10 cents or less, I should be able to close it. But let's see, okay? $72.50 is $17.24, so this will cost about 20 cents to close. All right, this should cost about 15 cents to close. Yeah, all right. Now I'm gonna close this 67.50 puts for about 10 cents over here. All right, okay, for about 10 cents. 10 cents to 15 cents, it should fill. Yeah. Okay, all right. Now, so there we go. There we go. 10 cents. We're done. All right, 10 cents, we're done. All right. So you can see the last price was, from 14 cents, it adjusted to 10 cents because the order was filled. Yeah. Okay. Now, anybody did this trade, anybody made this profit as well, you can leave a comment, all right, and let me know as well. All right, so let's mark it down. Another great trade on a defensive stock, 0.1. $360. and that releases another investment requirement. So we are back down to 65,000 now. That's nice, right? And yet another profit as well. Another winning trade. Voila. All right. Next up, right? GIS. All right, now, so throughout the last 1 year, all right, I've learned something over here. If I get all of you to type your questions at the end of the session, there's a little bit of lag on the back end. So if any of you have questions that you want to, ask me about the sessions and topics related to this session and, the strategy that we cover, right, you can start posting them so that I can come back to them later on, okay? All right, now, so you can start posting your questions, okay, but only related to what we're discussing in this public session, okay? All right, which means the portfolio puts. Okay, now, so let's go to GIS, and I have a 60 strike put option for 17 September, right? And I collected 180 for it. Now, so this one, we can't close. We can't close because it's still worth 140, right? So there's not much profits on it, and we'll stay put, yeah? Right now, the last one, CAH. Now, so for CAH, we have a 50 strike put for 17 September. Look, we have a profit. All right, we have a profit. What did the stock do in the last 1 week? It did absolutely nothing. We entered here on last Friday, right? Boom, 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 boom. Yeah, we entered here, right? Last Friday. Yep, here, right? And since then, the stock dipped, it crashed below, and then it started bouncing up, right? So we have a profit on Cardinal Health today, right? But I'm not going to take it. I'm not going to take it over here because there's still quite a decent amount left for 5 weeks to go, right? So I'm going to stay put in this one, yeah? All right, everyone. Now, so we have cleared off 2 positions today, all right? And let me go back to see if I can add back the trade that we missed out on last week, yeah? We can't. All right, so if all of you saw last week, we actually tried to get back into the menu put option, right? But it since ran higher. All right, so we probably can't get in on this one right now, yeah? All right, now, so we'll wait for it to correct, okay, and come back down. But today, I do want to add another stock into the portfolio, yeah? All right, I do want to add a stock into a portfolio, and Nate, I'll come back to your question. Okay, I'll come back to your question. Facebook user, I'm not sure who you are, all right? If you can identify yourself, okay, I'll be more than happy to help you out with a question, yeah? All right, so please click on the StreamYard link, okay, so that I can see who's leaving the comments, all right, and retype your questions again so I know who's leaving this question, yeah? All right, thank you very much. Now, so the stock that I want to add today, everyone, yep, whether you like it or not, today I'm looking at Rio Tinto, right? So I'm going back to commodities, right? Why? Because commodities have kind of like suffered over the last 1 month. Yeah, okay, but this stock is trading at its support level. Yeah, and I like that. Okay, I like that. And this stock pays a very, very hefty dividend. Yeah, all right, it pays $3.76 over here. Yeah, okay, but it's semi-annual, which means it only pays it twice a year, right? But if you look at this, right, it pays it twice a year. Okay, but can you see for a year it's still $7? That's 9.49% dividend. All right, okay, just dividend alone, that's 9% returns, all right, from the dividend. Yeah, okay. Now, so I like this because as you can see, the PE ratio is also really, really, really low, which means, yes, it's commodity stock. Okay, but 1, it pays dividends, right? And 2, it's one of the biggest, commodity related companies in the world, right? And number 3, it is trading for below 10 PE in the current markets. So where are you really going to find, right, these kind of, opportunities as well? Right, so the stock is now at 79.27. Okay, but I'm going to sell the 77. Okay, I'm going to take only September. All right, I think I'm comfortable with that. All right, so I'm going to do the 77.22 strike over here. Now, if some of you are looking at the strikes and you are, kind of asking, all right, Terence, why does it look so funny? All right, why does the strike look so funny? That's because the stock have probably issued or given a special dividend. Yeah, okay, a special dividend, right? That's one reason. Okay, or number two, right? They have done some splits or right issues, right, which causes the option strike to be adjusted to reflect these changes. Okay, all right. So that's one of the reasons. So when option traders trade options, you don't have to worry about corporate actions like splits or special dividend, because all the option strikes always get adjusted for this special occurrence. Yeah, as you see with this stock right now. Now, so I'm going to sell the 77.22 strike, right? So let's go place this order, and I'm going to take my typical three option position. Now, but please bear in mind, if anything happens, right, I'm prepared to allocate 77.22 times 300 shares, right? So that's what it means when we're selling portfolio puts. Okay, right now. So I have another Facebook user who's asking me the same question as well. Right, portfolio put strategy is different from 24-hour. The answer is yes. Okay, but please also approve Facebook use for StreamYard. Right, so I'll need you to click that button. Right, so that I can answer your question in more details. Okay. Right, hang on, give me a moment. I'm structuring the order and see if I can get it to bite. So I'm going to do this for somebody beat me to it. Own up. Who jumped my order? But once again, please remember the disclaimer before we start the session. Yeah. All right. All right. I'm done. All right. I'm done. I've got filled 3 contracts over here for Rio Tinto. Right. September 17, 77.22 puts. So 3 over here. All right. At 180. All right, so I sold 3 over here at 180, yeah? All right, now, so the order is filled. It is done on this public portfolio that we are building. So let's go record it. That is also trade 64 for our public portfolio. All right, Rio portfolio put 17 September, no change, 77.22. All right, we're doing this on 13th of August. All right, we're collecting 180. Oops, 180. Right now, so let's that's gonna bring me 540 in cash flow. Let's do our calculations now and see what's the return. Yeah, right now, so the returns are gonna be for this trade 180 divided by an investment of 77.22. Okay, so that's about 2.33%. Okay, and this now it's a 5-week option. So I'm going to divide it by 5 and then annualize it after that. So it's 24%. All right, and following our guidelines, our target is to hit trades that pays us over 20% per annum. Yeah, right, 20% per annum. Yeah, okay, now, so that's why we are doing this in this manner. All right, so Joanne, yes, your question, this is the stark difference between a naked put and a portfolio put. All right, so naked put option sellers, right, are usually selling, right, based on margin. They're taking leverage to do this trade. But when I say portfolio put, you can clearly see I said earlier, right, if anything happens, I've already allocated the cash, right, to pick up all the stocks. So to me, right, even if I have to buy the stocks, I have no risk at all. Right, as you can see, the investment I'm putting down is $23,166. Right, so that will bring my portfolio exposure back to 88,900 now. Yeah, okay, now the portfolio has about 117,000, right, 100,000, and adding on 17,000 in profits we made in year 1. Right, so the portfolio is worth 117,000. Okay, but this trade, after we get it done, which is filled already, my entire portfolio exposure, it's up to almost 89,000. Yeah, all right, 89,000. Yeah, okay. All right, now, Stephanie, I was using the TD Ameritrade platform. Yeah, okay, I was using the TOS or TD Ameritrade platform. Okay, all right, now, for Tastyworks, I use it pretty much for trade execution. Yeah, okay, all my features and everything, I still prefer the TD Ameritrade platform, right? They offer a lot more. Okay, by execution, I do it on Tastyworks. Okay, all right now. So we're gonna add only one trade today. All right, and there's nothing to hide as well because I do have a portfolio put on this portfolio, which is the VIX put option. All right, so that expires in August, which is next week. All right, so we will have to tackle it if there's a need to next week, come next week. All right, but for now we are good. Okay, and I do have a January 2022 JD.com portfolio put as well. Yeah, okay, so 80, of course, together with the Chinese stocks have fallen. All right, so in all transparency over here, let's look at this trade. All right, and let's see what it's worth. 77.50. All right, we sold this put option and we collected about $9.30, right? Okay, this put option is now valued at about 11.80. All right, so we are down, but nothing too drastic. All right, we are down by about $2 or so. Yeah, okay, and look, the stock is like what? 77.50 and it's dropped to 69, and I'm down by only $2. If you bought the stock at 77.50, right, by now you would have lost over $7. Can you see why? Yeah, okay. All right, now, so this is why I prefer building a long-term investment portfolio, being an option seller instead. Yeah, okay, now, so Engwu, just like I said before, right, I will only cover portfolio puts in this public session. All right, so for all the other trades and all the other strategies, I only cover it in my trading membership together with my members. Yeah, okay, because we discuss more advanced option strategies and how you can create bigger profits. Okay, but not in these public sessions. Okay, I hope you understand that. Yeah. Okay. Let's go to Desmond. All right, Desmond. I'm not too sure with Baidu yet. Okay, but I may have a look at it and I may come back next week. Yeah. All right, I may come back next week and have a look at it. I already have JD. Yeah. Okay, and Baidu has also come up with earnings. All right, earnings is already out and it has fallen from the earnings as well. So I'm going to relook at it, yeah, okay, and come back next week. Okay, now, so if I'm going to take anything, I'll probably come back next week and see if we're going to add it to the portfolio. Okay, Desmond? All right, but not for this week. I didn't prepare for this stock this week. All right, now, so Jeffrey's question is, how does TDA calculate margin requirements? All right, simple. What's percentage of the full stock amount? All right, now, all brokers offer you margins for selling put option at 20%. Yeah, all right, you can take a ballpark figure. Of course, there's more intricate calculations to it. Yeah, okay, but you can take a ballpark figure of 20%. Okay, but there is something you should never, ever, 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 ever do. Okay, it's like you trying to go out there and buy 10 properties, taking out 90% loan on every single one of them. Right, so never, ever, ever. Right, if you want to sign a death warrant, right, then go ahead and do it. Okay, but as an option seller, right, never ever do that. Okay, all right. Now, so I've done that. I've said that. So Dan, right? Dan, thank you very much. Don. Sorry, all right, Don. Thank you very much for approving StreamYard. And so yes, as you have seen me say earlier, I do have a portfolio put, or not so much a portfolio put, but I sold a put option on the VIX as a hedge for my portfolio. Okay, as you can see over here, all these are what we call slightly neutral to bullish positions, right? Because they are all put options. Right, so the VIX puts, right, will be a hedge in case the market goes down. Right, so can you see how careful I am? Right, my portfolio right now only exists on all defensive stocks aside from JD. Right, okay, all of them are defensive stocks or basic industries, and on top of that, I still insist on adding on a portfolio put. Portfolio hedge, right, with the VIX options. Yeah, okay, all right. Now, so these are all very, very carefully planned out over here. All right, now, so Stephanie, all right, now, of course, with this portfolio that I'm building over here, all right, you will not be able to achieve with a small account. That's why we cover trading strategies as an option seller in our mentorship programs that we have available, right? Because it involves more training, right, and more hand-holding, right, to let you know exactly how it's done, right, to make sure that we are there to help you navigate, okay, if any of these trades get into trouble. Yeah, okay, all right, now, so if you want to get started, I would say 24-hour is definitely something you want to wet your feet on, okay, but if you're ready, to jump in full on with us, right, you can consider our trading membership, right? Because our trading membership offers our participants, right, 2 live trading webinars every single week. All right, and not only that, all these sessions are all archives, which means you can continue to watch all the replays of these sessions, right, as many times as you want to learn whatever is being said and taught in these sessions. Yeah, okay, so it all depends on, how ready you are. Yeah, okay, now, but aside from all that, I'm still going to continue to do these sessions on Friday, right, to emphasize how safe option selling actually can be. Yeah, okay. Mike, this is a common misunderstanding for many, many people, all right? And I always tell my students this, right? The stock price going below the strike doesn't mean that people are going to claim on that option immediately, because you must understand, for option buyers, all right, especially put option buyers, they come in 2 forms. Number one, right, they are buying the put option for the downside. Okay, so if you buy a put option, right, looking for the stock to go down, and the stock went down, so you have profits, right? Now, so if you have profits, how are you going to take this profit? Are you just going to close that option trade, or are you going to convert it to the stock just to take that profit? Can you see why it doesn't make sense already? Yeah, okay, all right. And number 2, right, there are people who actually own the stock and they buy a put option to protect the stock from the downside. So they are spending money to protect the stock from the downside. Now, they have already paid. They cannot get this money back. And why do they do this? They want to protect the stock. So do you think they're going to let go of the stock early? So can you see why these 2 parties have absolutely no incentive, right? They have no incentive to actually exercise it early, unless, right, the stock or the stock price together with the option strike is presenting like a totally hopeless situation. Yeah, okay, it's like totally hopeless. The stock probably cannot bounce back to anywhere near the strike price. Then the person who owns the stock might probably give up on their stock. Okay, but as long as there's still hope, right, they're not going to exercise it early. So it's like a non-concern over there. Yeah. All right. Okay, Mike, I hope I answered your question. Darn, that should have been only said in the mentorship. I let it out again. Oh man. All right. So Paley, if you want to build a portfolio on something like what I've done over here, right, you can think of it this way, Paley. This is $100,000 portfolio, all right? And for most of the trades, I'm doing about 3 options, right? Okay, I'm doing about 3 options. So you can choose to do with the smallest quantity, which is 1 option. Yeah, okay, 1 option. So you can downsize the entire portfolio by about 1/3. You realize that? Yeah, okay. Now, so you can downsize the portfolio by about 1/3. So that will put it realistically about close to $30,000. Yeah, okay, is that a good gauge over here? Yeah, so you can start off by just selling 1 option contract for all these stocks, right? And that would be about 30,000, 1/3 of what I have right now. Yeah, okay, Tan, like I said over here, I'm not going to discuss this because this session is meant to educate the people who are not in our mentorship program, right? And in our mentorship program, all right, we trade, okay? We trade. We don't look at, these from an investment perspective, right? Hence, okay, just like Cardinal Health last week, all right, I didn't care so much about the timing, because if I cared, I probably wouldn't have entered the trade last Friday. Yeah, okay, all right. Now, so this portfolio is built from an investment philosophy. If I'm wrong, I'm more than happy to take the stock because I believe I will still end up profitable on that, right? Just like what we did on Nokia, all right? We actually, it was a sign on Nokia. Look, right? I saw the put option on Nokia. Where was I? Here, right? I saw a put option on Nokia on 24th of August last year for November expiry, right? And come that day, we actually got a sign, right? So I bought the stock. Right, and we just turn around and sell call options until we got out profitable, right? The whole trade ended up profitable at the end of the day, right? Not only that, we also did the same thing on Consolidated Edison here. All right, we sold the portfolio put, we were assigned the stock at 70. All right, we turned around, sold a call option, right? And we ended up with profit, all right? Look, 255 plus 270, all right? And we lost 360 on the stock. Okay, net, all right, is still a profit on this entire trade. Now, so that's why I never have to worry about the timing, okay, as long as the stock is telling me that it's undervalued. Yeah, okay, I have a lot of different things I can do as an option seller, right, to turn, this whole entire trade profitable. Yeah, okay, so think about what you can do if you actually learn, okay, many more different option strategies, how you can turn things around, right, how you can play around with different strategies, right, and work the issue out. Yeah, okay, so that's what we do in our live trading sessions every single week, actually. Yeah, right. We handle good trades, we handle bad trades, right? But we always have a lot of things that we can do. Yeah, all right, depending on what the stock does. All right, Don, it's entirely up to you. Right? Do you have more preference being a seller and collecting premiums, or do you have no reservations? Yeah, no reservations against paying to buy a call option. Right? Either way works. You realize, right? But by buying a call option, if you get that steep sell off over here, right? Of course, you're gonna make big profits. Okay, but it also means if it doesn't sell off, right, that money is wasted, right? Okay, but selling a put option, yeah, okay, even if it doesn't move, okay, I still make money. But if it continues to go down, right, I can always close that trade and then continue on with the next set of put option, which is what we've done for a couple of months over here on the VIX as a portfolio hedge. So it's really your preference over here on how you want to achieve the hedge for the portfolio. Yeah. All right, William. All right, now thank you very much for sending us an email. The team is overwhelmed. All right, as you can tell. All right, the team is overwhelmed, but not to worry. All right, we will come back to you with your inquiries. Yeah. Okay. All right. Thank you very much for showing us your excitement. Yeah. Okay. Now I will try to get the team to get in touch with you. Yeah. Okay, and provide you more details. Okay. Pei Li. All right, now Pei Li. When you're asking why don't I let the put options expire instead, if you can, you might want to rewatch this live session once it's converted and hosted on my Facebook public group, because I did say this, right? If the trade doesn't entice me anymore, which means like our WBA today, right? When I entered the trade, it was like a 9-week trade. Yeah, I collected 152 in premiums, and I'm looking to make it over a span of 9 weeks. Right? Okay. Now, so that works out to a premium of about 17 cents every single week that I'm pocketing. Correct? Now, but today the stock has moved in my favor. It went up, so it has caused the premiums of the put option to drop to only 30 cents left, and there's 5 weeks left to this option. Now, look, few things can happen. The stock can reverse back down. Right? I have a profitable trade that can turn bad. Right? And then number two, by hanging on to the last 5 weeks, I only stand to make 6 cents. Right, for that capital that's still tied down. Right, why not I free that capital, right, and then put it to work like Rio Tinto today? Can you see? All right, Paley, it's all about better use of capital, because by putting it on Rio Tinto, what did I do? I collected 180, right, for 5 weeks straight. Look, this is what I did, Paley. Right, I freed the capital from a trade that only offers me 6 cents in profit every week, right? And I moved it into a trade right now that offers me 36 cents in profit every week. Yeah, can you see where I'm going now? Right, so trying to increase our profits, trying to drive our gains, it doesn't have to come with severe, increased activity, right? It just has to come with better decisions, and that's something that I always train my participants to do, right? That the more trades you do, you need to start thinking, right, for every trade itself. Should I take a profit? Can my capital work for better returns if I free them up today? Yeah, okay. It's always about what you want to do with your money, right? And of course, you want to make it work the hardest possible. Am I not right? Okay, now if you want to do that, does this look like a good decision today, Paley? Definitely yes. Yeah, okay, so that's why I made the decision, right? I closed these 2 positions, I freed up the capital, right? And then we moved it into Rio Tinto. Yeah, okay, welcome. All right, you're welcome. All right, good to see that, good to see that you understand, right? Because, this is a public session, right? But, helping all of you understand is clearly what we want to do over here. Yeah, now, so I believe I've answered all the questions. Let me quickly scroll and see if I missed anything. Right, no, I've not. Right now, so thank you very much for joining me. Eileen, all right, now, so I'll answer Eileen's last question over here before we end off today's session, all right? Now, so Eileen was asking for ED over here, all right? When I get assigned the stock, okay, I would end up buying 300 shares of it, right? Now, so because I run these sessions on Friday, okay, and it's a fixed day, right? So I will only sell the call options during a session itself. Yeah, okay, so it's down to the restriction over here. just like, our Manchester United put option, right? I tried to resell it last week. It didn't get filled, right? I will only reattempt today, but provided if the trade still makes sense. And we saw just now, it didn't. Yeah, it wouldn't have allowed me to get a good premium, right? So that's why I will continue to wait next Friday and see if the opportunity arises again. Okay, now Eileen, if you're trading it on your own, right, then you can simply pick any date to sell the call option once you own a stock. Yeah. Okay. All right. So it's a give and take. Yeah. All right. I'm restricted by the session date. Okay, but you're not, because you're handling your own portfolio. Okay. I hope that's explanation they can understand. All right, everyone. Now, so once again, before I end off, all right, I just want to do a shout out again so that, those of you who have been listening do not miss out on this opportunity, okay? All right, I don't want you to miss out on this opportunity. So I'm going to put it up big, all right, for all of you to see. Now, so if you go to our Facebook public group, okay, now, so you will see a poster which is shared today, which is called the Hot and Fresh, okay? And it's also in our public Telegram group channel. Right, so if you have not joined our public Telegram group channel, you can do so as well. Okay, so this is the poster we're talking about, Hot and Fresh, I'm Possible Investors. We're doing a giveaway which starts from today, this Facebook Live, all the way until the 16th of September. All right, so all you need to do to qualify and get an entry, right, into this draw is simply to click the like button to this Facebook Live video, right, and then after that, share it, okay, but it must be a public share. Okay, so when you click the share button, you see many different choices. You have to choose the very first one on top, share bracket public. Yeah, okay, and then, okay, you'll simply qualify after that. Okay, so we'll take note of your Facebook profile and we'll assign you a number, right? So we'll go in running order. Yeah, okay, now when you come back and join me next Friday, okay, and you do this again, right, you'll get a second number. Yeah, okay, so the more times you join me, right, and the more times you share the Facebook Live session, right, the more qualifications you end up with. Now, what are we giving away? We're giving 3 slots, okay, to the upcoming 24-hour season, right? That is the final season for 2021 as well, okay, which starts in October, right? So we are preparing and giving away 3 slots, each of them worth $397, entirely free. Yeah, okay, now, and it's actually not just worth $397, okay, because the price is going up. Yeah, due to the intensity, due to how I've been running it, yeah, okay, it is going up. Yeah, okay, those of you who got in early, you recognize how much of a value, right, you have gotten, right, for the $397 price, that you have joined in over here, right? So for 2022, right, the price is going up, okay, but it means that I'm going to offer a lot more. Yeah, okay, all right, I'm going to offer a lot more. So those of you who have already joined us, you already know what great value it is, right? Even at a slightly higher price, right, it is still justifiable and still very, very cheap. Yeah. All right. Now, so do not miss out, everyone. If you want a free slot for the Q4 season, right, click the like and share it to a public. I will see all of you once again next Friday. Okay. Now, do take note, everyone. I have a prior mentorship session before that, so I may end up running next Friday session late. Okay. How many of you will be happy to join me late, even if I run it late? All right. If you are okay with late, all right, let me know. Right, type late in the comments. Okay, if I don't get enough people, then I may just postpone the session to the following week. Right, it is done for all of you after all, right? All right. Meanwhile, thank you very much, Lily. All right, thank you very much, Lily. Thank you very much, Zen. All right, and also Don. Yeah. All right, so it looks like all of you are ready. If you are ready, I'm ready too, okay? All right, now, so thank you very much for letting me know. I will see all of you next Friday again. All right, I'll post it up. So keep a lookout in our Facebook public group and for the time, okay? And I'll see all of you next Friday, okay? So I'll see what I'm going to add and what I'm going to take off next week. Thank you very much, and I'll see all of you. Bye-bye for now. Have a great weekend ahead. This is Terence. I'm Possible Investor signing off. Good night, everyone. Bye-bye.